Imagine spending 30 years of building retirement savings in a steady, consistent way, contributing regularly, staying disciplined, and growing a seven-figure IRA, and then realizing later in retirement that your taxes end up being more than you were expecting and a lot more complicated too. Hi, I'm Joe Overfield, President and Lead Advisor of Intelliplan Financial. And this is something that we see in almost every retirement plan we review. Traditional IRAs can create three very real tax problems, and they don't always show up all at once. They can show up over time. So let's walk through what those three problems can look like. First, required minimum distributions. Starting at age 73, the IRS requires you to begin taking withdrawals whether you need the income or not. And those withdrawals are taxed as ordinary income, which can then push you into a higher tax bracket. It can increase how much of your Social Security is taxed and even raise your Medicare premiums. Second, what happens to couples? When one spouse passes away, the survivor's taxes often go up, even if their income barely changes. Here's why. When you're married filing jointly, you can have twice as much income before you move into a higher tax bracket. But once you're filing as a single person, those same tax brackets narrow, meaning it takes a lot less income to push you into a higher bracket. So the surviving spouse can end up paying a noticeably higher tax rate on income that hasn't really even changed at all. And on top of that, the standard deduction is cut in half, which can add even more to the tax bill. And third, what happens to your kids? Most inherited IRAs now have to be emptied within 10 years. So instead of stretching taxes out over time, those withdrawals often get stacked on top of their income, often at a time during their highest earning years. So the real challenge isn't just building retirement savings. It's understanding what those savings may cost you over time. If the majority of your savings are built up in a traditional IRA, it may be worth taking a step back to see how it will impact your broader retirement and legacy plan when it comes to taxes and how much of your money you'll keep afterwards. At Intelliplan Financial, we work with pre-retirees and retirees who want clarity around how their assets will be taxed over time and how that impacts not just their retirement, but also the people they plan to leave it to. If that's something you've never really looked at closely, or you've been looking for a second opinion, it's worth a conversation now. You can visit intelliplanfinancial.com to schedule a complimentary 20-minute conversation with our team to better understand how taxes will impact your retirement income. I want to thank you for watching today, and we'll talk to you soon.